to the Web3 Prof Podcast.
Good morning and good afternoon, everybody. I'm here with Alex Thorn, head of firm-wide research at Galaxy. Alex, thanks so much for being with me here today.
Yeah, Jared, thanks for having me. Really excited. I know you've got some great questions lined up, and I'm always happy to talk with professors. I'm a child of academics myself, so happy to be here.
I appreciate that. Alex, can you just give us a quick rundown of how you got into crypto? What was the discovery process for you?
Yeah, I've told this story once or twice, but not that often. I've been interested in Bitcoin since 2012 in particular. Didn't go down the rabbit hole. Wasn't like a zealot for it that early, but I was doing digital forensic investigation at Fidelity Investments. This was where I started right out of college, and as part of that job is collecting evidence, indexing it, searching it, providing access to lawyers so they can review it, right? Handling the whole litigation discovery process for regulatory, legal, criminal investigations, whatever they may be. So as part of that, and I spend a decent amount of time searching through data, trying to break encryption, right? If there's an encrypted file, like we had have to do a best efforts attempt at trying to get it if it could be responsive. And I've always been, a hacker by hobby, and I don't mean like a network penetration expert, more like I learn on the computer by breaking the computer, right? Messing with and learning that way ever since I was a kid. So, but I studied political science and economics in college, and so I used to be involved on IRC channels, used to run a Tor exit node back then, which was risky. I used to get DMCA takedown notices from my internet service provider because some jerk was doing something illegal that got routed through my node or something, right? So I was sort of in this world, interested in encryption and cryptography and decentralized networking sort of as a hobby. And at some point, I think it was during the Euromaidan protests in the Ukraine, somebody was like, we can send Bitcoin to these people. They were holding, if you Google this, you'll see there's like pictures of activists in Kiev holding up QR codes saying, donate Bitcoin to us. And I was like, what is Bitcoin? And then somebody was like, oh, well, it's like internet money and blah, blah. And I thought it was super interesting, thought of it like a tool in the toolbox along with Veracrypt and TrueCrypt for like creating encrypted drives, and like Tor for encrypted, web communications and other encrypted messaging tools, and sort of just put it in that box. And then several years later, still at Fidelity, Abby Johnson, the CEO and owner of Fidelity Investments is a private company. And she got interested in Bitcoin, and she directed some people to look into it like in 2014 or 15. And they sent some like messages down across the whole firm saying, we're looking into this. Does anybody know about this? And people all around said, you got to talk to Alex in the legal department because he's been talking our ears off about this for a couple of years. Because in my job, right, it was a centrally managed legal and litigation group for all of Fidelity. That's like, hundreds of subsidiary companies and business units. And so I, over the years, had worked with people all across the company. And that sort of started, that's when I really was like, wow, if Fidelity is looking into it, really maybe, and I have this edge, like they're asking me what I know about it, how I can help them learn about it. I should really do that because I don't want to be a lawyer. And at this point I was like six years into this career as like a, legal investigator. And it's like, well, what is the next step? Like I go to like the FBI, technically from a technical standpoint might be the best career move, but it certainly doesn't pay a lot of money. And then there's like private, could go to a law firm and maybe make more money, but then it's like, that's a grind. And so I was like, what am I going to do anyway with my career? And I was like, oh, they're like effectively opening a Bitcoin department at Fidelity. Like I'll try to work in that. And eventually I did. And I was head of blockchain research at Fidelity Center for Applied Technology, and later co-ran a venture fund that we set up there called Avon Ventures, doing crypto VC. And now I've taken you all the way up to January 21 when I joined Galaxy. So that's the story. It's sort of like a mix of curiosity, extracurricular research and interest, and being in the right place at the right time and standing up and raising your hand.
Was it because you were interested in like the libertarian aspect of it, or was it like the freedom fighting aspect of Bitcoin? What was it that kind of captured you in those early days?
Well, the very early days, it was definitely more of my freedom fighting attitude as someone who's interested in encryption and networking and politics, I should say, in geopolitics. But that was in the 2012 sort of era. And then when I got interested in it in 2015, that's really when I went down the full rabbit hole for Bitcoin, monetary policy and stuff like that. I volunteered for Ron Paul's 2008 presidential campaign. Like once I really started looking at that, it made a lot of sense to me, right? And then it was sort of both after that, both monetary, technological, libertarian.
Okay, that's fascinating. Let's talk about what's happening in the United States now. We're a few days prior to Trump being appointed at the recording of this episode. What do you anticipate being some of the most significant regulatory changes for Bitcoin under the new administration in the United States?
I mean, I think we're expecting a lot of positive changes, right? So the market certainly is anticipating that. I think there's good reason to. I think, if we start with the foundation of why before what, I think the why is pretty straightforward. I think there was an alliance that was beneficial for both the Trump campaign and the crypto industry in America was effectively created, right? And I mean, with effectiveness. Crypto, I think, ended up being one of the largest, if not the largest single industry donor to the campaign. Something I think Stand With Crypto, which is the advocacy organization, I think that Coinbase founded. I don't think they operated. I think it's sort of standalone, but I think they've said that 290 of the 435 members of the U.S. Congress in this new Congress are on record as being pro crypto. So it definitely, and some of that's because I think it is an idea whose time has come. I think, I'd be remiss if I didn't admit that certainly a large part of it is about politics and campaign donations and influence. But we started to know, I think in May or so of last year, this market structure bill FIT 21, which is a bill in the U.S. Congress that would comprehensively designate the correct jurisdiction for different types of tokens. And it would explain like, okay, the commodities regulator oversees this part of the industry for this reason, and the securities regulator oversees this part, which is clarity the industry has wanted for a long time. That bill passed in a very overwhelming bipartisan fashion from the U.S. House. So the same month, the Congress, both houses passed on a bipartisan basis a repeal of this really stupid banking regulation, sort of bank balance sheet regulation that the SEC had put forth, the securities regulator, overturned it basically by vote and sent that to President Biden's desk, and he was forced to veto it. These were sort of like the first signs. And then now President-elect Trump, then candidate Trump, had come out and said that he was supportive of Bitcoin mining in a speech, right? And then, a couple more little tidbits, but then in Nashville at the Bitcoin conference in July, Trump gave a roaring, 48-minute speech where even after I cut out literally every blank space and the other few things he talked about, was still like a 14-minute like menu of the crypto industry's like asks, right? So he's made some promises about what he would do, and the industry backed him and backed the Congress people and members of both parties if they also agreed. So that's how it happened and why it happened. I think what is going to happen is obviously the more interesting question. There's a whole range of issues that the industry cares about, ranging from things that will improve the legality or clarify the legality of DeFi, that will make it possible for companies to support the trading of digital assets, like crypto exchanges, for example, without being sued, right? Like, what is the pathway for that? Which is it a matter of limiting the types of tokens? If so, which? Or is there a license that we need? If so, which? All of that's been very up in the air. That stuff we expect will get sorted out. And then things like stablecoins, formalizing and legalizing the issuance of stablecoins is a big ask for the industry. all the way to things that are like a little bit more afield and controversial, but nonetheless very important, like all the stuff related to terrorism financing and anti-money laundering rules and sanctions on foreign entities, right? All of which sort of the Biden administration had been very strict with in ways that were, I think, quite harmful to the crypto industry that we hope will change. And it's not just about an easing, right? The industry isn't looking for a free pass, but if you go down the list of actions, for example, that Gary Gensler at the Securities and Exchange Commission took, I think you'll find that he went after a lot of good actors who genuinely try to do a good job and be safe and protect customers and their assets, and missed a lot of just iconic frauds, right? Like FTX, didn't do anything on FTX. Met with Sam Bankman-Fried reportedly multiple times before FTX collapsed, but somehow missed that one. Oops. So I think what we're really hoping for is strong enforcement to root out bad actors, but pathways to allow innovation and a progressive industry to form and grow in America. I'll stop there. We can maybe let you follow up, but I could go on and on about this, but at a high level, that's really all that we're asking for is fair treatment and rules that protect consumers, but also promote the growth of capital in the United States.
How do you personally, as someone who may be a libertarian or have interest in that field, look at regulation and say, you know, some regulation is good, but I don't want too much government intervention. And obviously Bitcoiners often do not appreciate government regulation, but there seems to be kind of agreement amongst the community that says, well, we need clarity or we need regulation to help us move forward. So, I mean, some people might say that we're maybe compromising on some of our values when asking or making requests on some of these types of things. Yeah,
it's a, you know, what happens when an immovable object like meets an unstoppable force in some ways. Like, I think there was after FTX collapsed, there's a congressman in the House, a Democrat named Brad Sherman from California, who's one of crypto's most iconic antagonists. He's actually, in many ways, he's said some of the best critiques, right? He doesn't, I mean, he also says some of the worst, but, you know, he said that, you know, one of the reasons you've got to oppose this is that it will threaten the primacy of banks, right? Well, I think there's some truth to that. It's not like in some, you know, I think perhaps the staunchest supporters of crypto, Bitcoin, public blockchains would agree with that, right? Like it's the banks and the traditional financial services industry they want to disrupt. So he famously said, like, maybe we should pause this whole crypto thing till we figure it out. He said that in a hearing. And of course we're laughing because we're like, I mean, I can't even imagine what you think you mean when you say that, but obviously you can't pause it, right? I think open source decentralized networks are the definition of an unstoppable force. So on the one hand, the government has to reckon with something and admit to itself that it's not going away. And this is one of the ways I explained some of the worst policy proposals that we saw under the Biden administration was, look, it's not even just that I disagree with this policy idea. Like Elizabeth Warren, the senator from Massachusetts, had proposed a bill called the Digital Assets Anti-Money Laundering Act, which would have basically required whole swaths of the decentralized stack to register as if they were banks, like to conduct know your customer, you know, get all the personal information for everyone that uses the service. But that would include like open source wallet developers and Bitcoin miners and Ethereum staker. Is simply not possible, right? So what I said was some of these terrible ideas, the government trying to deal and reckon with this unstoppable force, came out with things that would effectively just create, ineffective prohibition, unenforceable prohibition, right? You wouldn't actually stop it. You would just make it illegal. So I think now when you look at what the industry is asking for, you know, why aren't they asking for clear libertarian, like laissez-faire, proposals? Why are they asking for comprehensive regulatory jurisdictional clarity, right? I think one of the big reasons I think is that there's a big fear that even if you got a true some kind of, just let the private, stop enforcing or relax the rules and let the private industry figure it out, which might be a more pure libertarian approach to it. I think the big fear is that if they did that, well, then the next president can just come in and reverse it. And so part of the reason for asking for whether it's codified in legislation or through formal rulemaking processes, is to make sure it's enshrined. You don't want to be oscillating every 4 years between a supportive and an antagonistic environment, right? And especially if you're trying to build a long-term business, like I think that's at the core. And I think one of the ways that if you're in the industry like I am, and I do broadly support that approach, even as a libertarian-minded individual, partly for that reason. And I think one of the ways that I and others reckon with that is that we have to, there's some red lines that we have and some core, ideas and things in crypto and in Bitcoin that we have to protect. And that as long as those are protected, you can sort of regulate the businesses that build on top of them and make it so that people can build companies and products and services over the long term without compromising the core integrity. That's what we're striving for, right? Things like self-custody, protecting the right to always be able to withdraw your assets to self-custody. I don't know that you don't have that right with like equity securities. I do know it's not possible, like technologically. If it were possible, would we have the right? I don't know, but I know it is possible with Bitcoin, and we know we need that right? So I think that as a core is definitely one of them. And again, not treating a software developer who say contributes to Bitcoin Core as if they're a bank and they need to like be responsible for the way that the free software they write and give away for free is used by the public, right? The same way, if a terrorist writes their manifesto in Microsoft Word, nobody goes after Microsoft for giving them the tools, right?
That's a good analogy.
Things are, those are red lines for us. And I think as long as we can codify and protect those, it doesn't matter too much if like, take the ETFs. Some of my Bitcoin friends have, worried that, or any large holder of Bitcoin really, that isn't this bad for Bitcoin? Doesn't it represent some level of capture? And I'm like, well, as long as you can opt out, like I'm perfectly supportive personally of people using a custodian or an ETF to custody their Bitcoin. I just want to know that for sure I can always do it myself. And it does require it's like a muscle, like that's why you have this, like on January 3rd, there's this, not your coins, not your keys, not your coins day, where people withdraw coins from exchanges. I think Trace Mayer invented that. To test their solvency and prove that you could. Like I do support exercising that muscle, but I think really when it boils down, it's the optionality that has to be preserved that this technology and movement gives us. So that's sort of how I think of the balance between the two.
I like that. I think that's helpful to understand that there's value in legislation to solidify the future of the industry so that, the next generation of politicians are limited, or at least there's a barrier for them to change and go back on what has already been set up. I want to ask you commented earlier about stablecoins. So, obviously there's this perspective that Bitcoin could destroy the American dollar, and that may be problematic, although maybe far off, but stablecoins maybe have the ability to stabilize or save the American dollar. With increasing focus on stablecoins globally, how might U.S. policy change to affect broader the crypto ecosystem, and especially Bitcoin relating back to stablecoins?
Yeah, I think there is some acceptance of the idea that stablecoins enhance and extend the dollar's reach rather than impede it or challenge it. I think in fact, there's pretty clear agreement between the two political parties in the U.S. that something should get done. In 2023, the House Financial Services Committee, which is the sort of primary committee where these ideas are floated and done in the House of Representatives, they were pretty close to getting a bipartisan deal on this. I think the reported sticking points were about which types of entities would be able to issue stablecoins. I think the Democrats wanted it to be primarily national banks, big banks, whereas the Republicans wanted both what we call a state pathway, so a state chartered bank. So in the US, right, you can be a bank with a license from the federal government, but you can also be a bank with a license from New York State, right? Like BNY Mellon is a state chartered trust company out of New York. That's the bank that Alexander Hamilton founded in, the 1700s. Now they all banks, if they're, BNY is still a member of the Federal Reserve System. So the Fed has some oversight, but their primary prudential regulator, as it's called, is New York State. And in the Democrats' proposal back then, they wouldn't be eligible to be a stablecoin issuer, and Republicans wanted there to be the state pathway. And by the way, New York State wanted it too because the New York Department of Financial Services, which is the regulator in the state, NYDFS, it's referred to as, they have already licensed stablecoin issuers. Paxos operates with a New York State license, right? Like they're a big, so like they were very progressive on it and they didn't want to be cut out of the process. So and that's obviously a Democratic state as well, New York. So there was some disagreement on that. And then about little things like I would say relatively little things like the type of collateral that has to be backing it. So they were close. I would say there's a pretty good where I think now the agreement, the disagreement is no longer over exactly how. There's a little bit, some of those ones I just said, how to license them or who should have them. There's some disagreement, but they're pretty close. I mean, in the scheme of things, obviously it matters a lot. Like when we're talking about law, whether it's only federal banks or also state banks and perhaps even non-bank issuers. Like if you think about like Tether, they're not a bank in the US. So would there be a pathway for them? And that would matter for the same reason that I mentioned about the unenforceable prohibition. If you say only national banks can do it, and then it turns out there's none that want to do it, well, then what happens to the one that already has $140 billion worth of stablecoins already floating? They're not going to just close their shop, right? So in my mind, you do have to incorporate the existing industry. But I think now the question is more about who, literally more finely, who. Should it be primary dealers? Should it be people that buy and hold treasuries? Should it be custody banks only? Should it be special new type of bank or entity, right? And also, what would the effect be on the stability of the banking system is a question. So we know that demand for U.S. debt is declining worldwide, and that really matters because we have a lot of it. We owe a lot of it, right? So I think on its face, most people agree that a new payments product or, let's just say explicitly stable coins being massive buyers of U.S. debt, Tether being like, I don't know, 16 or 18th of the largest holder of U.S. treasuries in the world, that's positive. If the total circulating supply of stables goes from 205 billion US dollars to $2 trillion, that's potentially a lot of new demand to buy U.S. debt if they all do and have to. And both parties' bills did require it be collateralized primarily with U.S. Treasury bills. So I think people get that. The question is more now like, well, would people flee into those stable coins and leave the banks with their money? Could that pose a stability question to the banking system itself? Kind of the way U.S. money market funds are at like all-time highs in AUM. That's money, a lot of it that historically might be held at commercial banks, and therefore commercial banks can then issue loans on it fractionally and create money by creating new businesses and funding new businesses. So like there are questions I think about what happens if stablecoins are super widely adopted and they cause a flight of capital into them, especially if they were allowed to pass interest they earn from the underlying collateral on to the holders of it. Now it looks like a money market fund with wings. Gosh, that looks pretty attractive to me, and so much so that I might not keep any money in a bank, right? And so I think that's sort of now where the policy questions really are, and to me that's extremely healthy. Those are very big and legitimate questions to be asking. So I think we're well past the point of should. It's definitely a question of when at this point, with some really thoughtful questions to think up. And how it relates to Bitcoin, I mean, I think Bitcoin is just pretty much unstoppable in the scheme of things. Whether it's widely used for payments one day and becomes a literal reserve currency obviously remains to be seen. I don't personally think it has to be widely successful and adopted. Could be a non-sovereign store of value that sure is used for some payments, but I don't personally think sovereigns are going to give up the ability to print their own currency easily, and I don't think they have to. I think if Bitcoin is incorporated into the global monetary system, I think it's more likely as sort of a reserve asset like gold, and governments print paper on top of it with some amount of reserve ratio that, maybe even affects the trading value of their paper, right? But I think I don't think they're really in conflict the way some people think. I don't think there was ever a likelihood that the US government was going to cease operating its own printing press and just sort of be like, okay, well, we'll just use Bitcoin then, right? Like I think even in the most bullish scenario is something closer to what Hal Finney wrote very early on about the idea of Bitcoin banks, which is banks with various levels of reserve held in Bitcoin, right? And then their paper can trade at a premium or discount to their holdings.
Can you explain how stablecoins work and how they would be helpful to be widely adopted, how that would be helpful for the US dollar?
Yeah, I mean, one of the main ways is that, like, there's this great, I'll tell you this story. There was, and I have no attribution, recollection of where I heard this story, but I read this once, or I saw it years ago, like in the, maybe even in the late 90s, like before the dot-com bubble. Somebody, a reporter asked Bill Gates, they said, when he was CEO of Microsoft still, they said, there's something like 10 million pirated copies of Windows in China. Like, doesn't that make you upset? And his answer, I've never forgotten. I thought it was so interesting. He said, no, I'm just happy it's not Mac OS that they're pirating. Like, I would much rather it be mine if they're going to pirate something, which I thought was so interesting because, and I really think about, I actually think about this a lot as sort of, especially with something like piracy or the free movement of information on the internet. Excuse me. And I think of it similarly with dollars. Like, we would rather you think of the euro dollar complex. Like, we would rather you be using the US dollar as your unit account than like the Chinese renminbi or the Russian ruble. Like, I think I don't think any American would dispute that. Right. I think, so you want it as widely available as possible. And the best currency in any given situation is the one that's most widely accepted. I mean, you might have dollars, but if you're if you're standing on outside a chocolate shop in Belgium, they might take dollars, but they probably want euros because that's just what's most widely accepted. So the dollar is just not as good money there. It might be a good store of value there. It's certainly the euro, Euro USD that's a whole different conversation about store of value. But in terms of extending the power and reach of the dollar, that is something that I think we always should be doing. I mean, I don't think you could ever, even if you're a critic of the dollar, or even if you want the Bitcoin to replace the dollar, you shouldn't hasten that. It'd be incredibly disruptive, right? Like, I think it can happen. It may happen over time and naturally, but stablecoins, to their features, are significantly faster and cheaper in general than, certainly for international types of transfers. There's a little bit of a misnomer when you compare them to something like Visa or MasterCard. Those payment systems, like the 1-3% interchange fee that is paid by the merchant, that comes with stuff. That's not like they're not making 3% on every payment. Amex, like, they're doing fraud prevention and preventing chargebacks and paying you points and all this other stuff that isn't really like it's like more of an apples and oranges comparison to stables. So it's not necessarily that the merchant payments in a store are so much better with stables. But to me, like, moving money, like, anywhere, basically, like paying any employee it's faster than, ACH, we call it. I don't know what you have, but the normal interbank payment thing, like how you get paid your salary, that type of interbank payment still takes like a day in the US. Like, right. So they're faster, they're more transparent. They're global. The technology, the wallet technology, is open source, super easy. Anyone can integrate it. That's why all the exchanges do, right? It's whether it's on the, particularly the EVM, right? Whether Ethereum and its other sort of, even Tron, which has like, I think half of the tethers are issued on Tron. Well, it's still an EVM fork, right? Easy to integrate. It's like the tech that anybody can get. So faster, cheaper, more transparent, able to be held at a custodian or self-custody like cash, easy to integrate. Those are all reasons why it's better. But broadly speaking, we want the dollar to be used more widely. And then the other point I made before, which is, well, it turns out these are also heavily collateralized with our debt. And we also would prefer if people would buy our debt, which also supports the dollar.
That's great. Thank you. I live in Vancouver, and here in Vancouver, we have the mayor of the city has put forward a motion to make Vancouver a Bitcoin-friendly city and to hold it on reserve. We're actually having a lunch and learn with city staff this week, which is pretty exciting to start the education process. Do you see a scenario where the U.S. government or major corporations adopt Bitcoin as part of their strategic reserve? And what would have to happen to trigger this type of shift?
Yeah, it's a great question. It's one everyone is asking. I think rightly so. I mean, when you look at Bitcoin's fundamental features, but also its financial performance, it's really hard to ignore, right? I mean, Bitcoin was up, 150% last year, and the S&P 500 was closed the year below, up less than 30%, and that was a great year, right? I mean, for U.S. equities. So anyone that manages money for any purpose has to be looking at them saying, well, wait a second, why didn't I have some of that, right? And you could say, oh, it's too volatile. It's too the regulatory questions, you could say. Well, volatility is easy. If you manage money, you know how to handle volatility. The simplest way is with position size. You don't ape the entire balance sheet of the city of Vancouver onto it, but you could easily control. And we at Galaxy and many others have put out the research that and the models to how to model that. And, and what we found, and this, I think we published this like the end of last year, but they can rerun it. As long as Bitcoin is up in price when you run it, you don't run the model like right when it's like down a whole bunch at that exact moment. And of course it has gone down a lot many times, but it's net up the whole time. Like, right. So on any long enough time frame, if you look historically, Bitcoin would have been a good investment. Like you empirically know that, right? It's $96,100 today. So basically if you bought it any time other than, between like November 25th, 2024 and like December 12th, like you're up basically, right? Like, yeah. Like we know this, but we did some studies and found that it had a huge benefit to a standard portfolio at almost any level that you had added it. Obviously, the more you added it, the more volatile your portfolio got, right? But we found that the biggest net incremental improvement to the risk-adjusted returns of standard portfolios, so the Sharpe ratio and the Sortino ratio, which also is a different ratio that tries to mitigate the downside impact, the biggest net incremental improvement was just going from 0 to 1%. If you did 5, and you held over the right time periods, you made more. Point being, any type of portfolio historically could benefit from holding some amount of the world's best performing asset. Add to it the fact that it has no issuer liability. It's not issued by anyone, right? Sure, you've got some custody risk that's, I wouldn't say particularly bigger at this point than holding an equity. Maybe it's slightly bigger, but custody largely figured out, certainly at the institutional level. There are other risks other than performance but I think they're pretty mitigated. And on the performance side, like I said, pretty much any study that looks back. I mean, I think at one point we looked at this, it's even improved now, but even like last May, it was like if you bought Bitcoin at literally any point, held it for more than 2.5 years, you made money. Like at any time at all, you bought the top, right, of 2017, or you bought the 2021 top and you had made money eventually. And again, of course, that might not always be true, but my point is that applies to all types of portfolios, whether it's a corporate balance sheet, or a lot of big cash wealthy corporations effectively run a small hedge fund in some part inside their balance sheet. Sure, most of it's probably cash equivalents, sovereign debt, money markets, but somewhere in there they've got a portfolio. And just if they do the math, they would find that holding some Bitcoin there has historically been very additive. Same thing, like a city like Vancouver or a nation state. I think it's obvious that it has been a good performer. I think the question about nation states in particular is very interesting. And just to answer your direct question, Jarrett, we predicted that 5 NASDAQ 100 companies and 5 nation states or sovereign wealth funds would announce that they are strategically holding Bitcoin.
Did you predict which ones, or you're just saying 5?
No, general? We didn't pick them out. But we did say that there would be that many. And so I think the corporates are a little bit similar to the institutions or even the city. I think at a small amount or at some amount, it certainly can be additive. And that's a financial and asset management question, right? And the asset management question has been resoundingly answered. BlackRock is saying you should do 2%. I think you'll see more financial advisors come out with model portfolios that include it in 25 also. And the question about nation states, I think, is much more interesting and geopolitical. I mean, the fact that it is sovereign, issued by no issuer, or I should say non-sovereign, not issued by an issuer. It is nobody's liability, a Bitcoin. The fact that it's global, that it can store immense amounts of wealth at extremely low mass, that it's fungible, that it's, et cetera, secure. does make it a very attractive asset for a nation state, similar to the way gold is. And I saw a great article talking about how the breakdown in trade settlement with the dollar due to sanctions and other stuff and geopolitics might see gold become a bigger, more widely used asset for trade settlement between non-US countries. And I was reading this article saying, man, you are so close, because like, I don't know how you're going to settle a massive trade deficit with gold. Are you going to put like, you're going to fill up a cargo ship and send it with a fleet of warships? Like
Right.
Gold. I mean, do you know what $1 billion of gold looks like? It's a ton. It's physically a massive amount of mass, right? It's not easily transferable at all in size, certainly not at nation state level size. Bitcoin, of course, is weightless, right? I mean, you can, the old joke, it's not a joke, it's totally true. I don't recommend people do this because human brain does forget stuff, but you could just memorize 12 words and walk across a border like that's how weightless it is. So I think there's really interesting reasons, particularly for ex-US countries, to have Bitcoin in general, whether it's for protecting against the threat of sanctions from a larger country or for settling assets with a country who, and neither of you want to accept the other's FX, and you don't want to use the dollar for some reason. I think it does make a lot of sense. It could make sense to use as a hedge against US dollar risk. Right? A lot of countries have to peg their currencies to the dollar. That's with the strong dollar we're seeing now, which is the US dollar is kind of acting like a wrecking ball around the world. Could be good to have something that helps hedge that, if you think Bitcoin does. So I think there's a lot of reasons why you might want to. I think you will see non-US countries do it at some level increasing. I think there are many more than are publicly announced, either in the sovereign wealth fund level, probably not so much yet at those countries' central banks, but also in sort of other vehicles, national vehicles. And then finally, the U.S. The U.S. is a very interesting question. I sort of hinted at this about why you might not want to promote Bitcoin to take over the dollar. It might be okay if it did, or if it one day became a reserve type asset, but certainly no U.S. policymaker would hasten the decline of the dollar's reserve status. Even if you admit, which I believe, that it's inevitable the dollar will not always be the global reserve currency. No, there have been a dozen in sort of modern history, and they've all lost that throne, right? Like, it's sort of inevitable. You'd have to believe in the end of history to think that the dollar will always be the global reserve currency. So you might say, well, gosh, wouldn't it make sense to hedge and have something, you'd rather, if it's not the dollar, you'd prefer it to be a global non-sovereign decentralized digital asset and not your competitor's currency. I think if you could get a policymaker to that point, they'd probably admit that, but politics is not ready for a conversation like that, I don't believe. And it's possible that even doing it or thinking about it for that reason, specifically to hedge against US dollar dominance, could cause the dollar to collapse, right? Like, it's very risky, right? So I think what President-elect Trump has promised is to never sell your Bitcoin and establish a national Bitcoin stockpile comprised of coins the government already has. And we've been tracking this. That's actually a little bit tricky because most of the coins the government has are, we believe, owed to Bitfinex from the 2016 hack of the exchange. They are a victim of a crime. And the federal government has said in court papers that they think Bitfinex is the only valid claimant, right? So those presumably get returned, and I believe they should. And then you have the next biggest chunk is this Silk Road recovered coins belonging to Individual X. And those coins, the government was effectively cleared by the court to start selling at the end of December. It's not clear that they have sold. In fact, as far as I can tell, there's no actual evidence that they have sold. But if they sell those and give the Bitfinex coins back, you're looking at only about 15,000 Bitcoin that could comprise the stockpile, right? And then lastly, the idea is, should you buy Bitcoin? And I think this is where it's tricky. Like, this is where if you buy it in the wrong way for the wrong reasons, it could cause jitters in the agency debt markets. It could cause our foreign debt holders, take Japan, the number one holder of U.S. debt. Like, surely you wouldn't do it without making sure they weren't worried about it, right? Like, I mean, they own a lot of our debt, right? You don't want to imply that you're doing it because you're worried the debt will lose value or not be repaid. That could have dramatic and negative effects to the US dollar and therefore the US. So maybe if you did it in some way, either very small in that area or you just do it totally elsewhere, it could work. But I'm not sure. We've also said we predict the US government will not purchase Bitcoin in 2025, though they will try to implement that stockpile.
One thing you did predict in your crypto predictions for 2025 report, which you authored at Galaxy, was the price of Bitcoin hitting $150,000 for the first half of 2025, potentially $185,000 by the year end, if I'm correct. What do you think is going to drive this appreciation, and how confident are you in these price predictions?
How confident? Well, I don't usually make them in general because I would say they have limited value, right? It's mostly about sparking conversation and getting coverage of your research, right? That's why that was the first prediction in that report of 23 predictions. So that you open and you say, oh, right there, good. He's got numbers for me.
It works.
Yeah, I think, look, 150 is a 50+% increase from here over the next 6 months, right? We said H1, so it's the first half of the year. This is, I would say, almost entirely a bet on what happens with government policy and institutional adoption in general, right? It's who buys it. Does the government buy it, hold it, say positive things about it, conduct research reports and produce them that say things about it that are positive, take the steps that the industry was expecting or hoping for, the early steps for regulatory clarity and easing that in that first half of the year. And I think it's really not crazy to think, like, if you see announcements of like a major nation state or a big companies like doing it, like it can snowball pretty fast. So I think, and the same is for 185. I think if you look at the list of some prominent predictions, it's sort of to the lower end of what some of the more bullish people are suggesting. In general, I think crypto industry tends to get a little bit like too excited and move a little too quickly and just think that they be a little too bullish and think things will happen more quickly than they do. So I'm trying to come out on the slightly conservative side, even though we're talking about like almost at 96K. That's almost a 100% increase actually from here. So that'd be a great year. I think for Bitcoin, it's largely based on institutional, corporate, nation state adoption is the idea. So we have some other predictions in there that support this idea, such as like that a major wealth management platform will put out model portfolios that suggest to buy it. Right now, some of the big wealth management platforms, think about the networks of financial advisors that manage like thousands of people's money, but are affiliated with banks, right? The Morgan Stanleys of the world. They mostly, if they do, and Morgan Stanley is among the most forward thinking, they actually offered select clients of theirs access exposure to private Bitcoin funds before the ETFs even launched. Some of these platforms may now allow, if the client pesters them enough and they're wealthy enough, they may allow them to buy the ETFs in their advisor managed accounts. As far as I know, none of the major platforms are able to, let alone are recommending it. And I think if you start to see some actually recommend exposure, which again, I laid out some of the case for, like from a portfolio construction standpoint, it's almost always been a good idea to have some. I think that could really drive the ownership of Bitcoin much higher. I think you really actually have a large amount, something like $30 trillion invested at these big wealth management platforms that even with the ETFs, they really haven't turned them on those platforms yet.
That's interesting to hear that because the ETFs seem to be the driving force behind the price increase over the last few months. And to understand that maybe it's just getting started, obviously gives the bull a lot of faith that we're going to get to these price predictions and past. And when you look at things that Michael Saylor and Cathie Wood and some of these people are saying, you're like, holy cow, like how is that going to happen? And it's great to hear you put out a case for some kind of movement to the up.
Yeah, I mean, the ETFs just in general are, and this is true outside of Bitcoin, they are excellent vehicles. They're efficient. They're widely available. I think you might also get like what we call in-kind create and redeem for those ETFs. So right now, you can only make new shares of the ETF with cash. So like, I mean, you don't care as the individual, like it's handled behind the scenes, but if you could deposit Bitcoin into the ETF and then later withdraw Bitcoin from the ETF, that is an extremely bullish thing too. Then it becomes sort of like a freely tradable, holdable in a brokerage account custody solution And it would mean that you could probably put in and take out assets from your ETF without incurring capital gains taxes, which would just make them even bigger. They don't even need to be much bigger, it's hard to imagine them being more successful. I mean, IBIT alone, let alone the combined complex, is the most successful ETF launch in financial history. So there's no dispute about the demand for them. But I think even on the structural thing, they could even get better in 25.
That's amazing. Alex, I really appreciate you joining me here today. It's been super educational and fascinating. This episode is going to come out the day after Trump is in office, and then shortly after we'll see how these things play out. I really appreciate your time today. Thanks so much for being with me.
Jarrett, anytime. Thanks for having me.